Hello. Getting the stream started. I'm your boss, Joe Boss. And welcome to another week ahead trading outlook. We have some risks to the upside here towards the end of the month on the dollar. Gonna bring your attention to this new indicator I built, the timing dots. Essentially what this thing is doing is it's looking at the low for the month that we have right now. Right? This is the low for the month currently. And what it's doing is it's going back and looking at all this historical data. And it's finding, hey, whenever we had the low around this price relative to the open and around this bar here on the month, where have the highs occurred historically? And that's what all these little red dots mean. Each one of these dots is a little unique high from a prior month. Now, looking right at this, we can kind of disqualify all these data points as the likely high for the month, given this low here, because all these highs are pretty much equivalent or lower than the current high we have. So that just leaves this chunk of data here for us to be concerned about. And I see a cluster of highs in the timing dots right here. So I'm going to do something really simplistic. I'm just going to set an expectation that we get a high out there around this time. So the high could be around here, or it could be around here. I'm going to kind of split the difference and say, okay, the high is probably somewhere around here. So let's go ahead and timestamp this. Today is the 12th, I believe. No, it's the 13th. So around here is where I'm expecting the high. Now, let's go to our weekly trade plans, and you can see we don't get our highs up here all that often, even when the low for the week is down here. And listen to what I just said there. Because no, these dots just changed. I went to the 12-hour time frame. And now instead of looking at dots on the month, it's looking at dots for the week. So given your low here, this is the total possible outcome of all the weekly highs we've had historically. So when you check the settings for the indicator, you can actually see the auto time frame feature is in here. So when you go to a daily chart, it gives you monthly timing dots. Go to a 12-hour, gives you weekly timing dots. Go to a 1-hour, gives you daily timing dots. Check that out. So when your low is here on the day, right here, pretty much right at the open, it seems, you get a lot of your highs right around here. Ain't that kind of cool? Like you got a cluster of highs here and a cluster of highs there. We can kind of discount all these things. And then you see how spread out these dots are. This is where the ranges can come in handy. Yep. A lot of highs around here. A lot of highs around here when you have this aggressive of a low. Okay. Let's look at our data here. Yes, it is Friday. No, it's Saturday. Today's Saturday. Yeah, check that out. This is a pretty far out move. You really don't get a high, this high on the week, all that frequently. Check that out. So next week, I'm expecting positive drift, but more range boundedness. So while this might be my expectation for the dollar, essentially pointing to 107 on the month, let's look at our odds for the week ahead. And using the traditional calculation for pivot points, yeah, a lot of our highs are around here. If we go and switch this over to ATR pivots, give it a sec to calculate, and there you go. So next week, given ATR pivots, says most of our highs are around here. Now understand that this indicator uses seasonal data, and it's also only using 17 samples. So something we can do here is turn off the auto time frame, go to a daily chart, and then look at next week's pivots and next week's pivot probabilities using 44 samples. And you can still see, yeah, most of the highs next week are around here. Less likely that your highs are way up here around 107-ish, the high 106s. So I'd actually set an expectation for a move like this, essentially right off the open. We can go ahead, set this to low to figure out where we can find a low. Wow, a lot of the lows are down here. I don't know if it's going to reverse that much because things are quite bullish right now. And let's also look at our weekly data. So yeah, maybe down to about here. And let's look at our closing data here real quick. Yep, probably a strong reversal here into the close. And let's look at our closing data with the probability pivots. see where most of our closes end up. Yeah, either right around here or somewhere down here. Given the risk on move here, I would not assume that we close down here. So let's set this one to red, set this one to blue. So this is the high, the low, and the close. I'm not so sure how accurate this is going to end up being, to be frank. We're going to look at a couple other charts here for the week ahead as well. So yeah, it'd be a pretty conservative move out for next week. Before I timestamp these, I want to confirm and look at some other USD pairs. Yeah, and check that out. Nice, nice risk management, nice move, good trades. Let's go ahead and check out our probability pivots on the low side for the euro dollar. And most of the lows next week are right around here. But again, this is given seasonal data. Let's look at the timing dots here for the month. And let's actually update this so it's using the auto time frame. So for the month on the euro dollar, and I'm looking at these monthly levels here for this week ahead, because this bearish continuation, these super negative yield spreads, are likely to continue this negative momentum here. So if we do move lower, I'd expect a new low somewhere around here this week. You can see we have a little cluster of lows around here. And we also have a peak in our distribution. So we have this to look at. So that's one setup. If we do get a more range-bound look, something like that, essentially sideways, I would still expect a threat in the following week, which is the last week of April, to still end up lower down here, essentially in the low 105s. So there are some very, very clear risks to the downside here. Real quick, I'm gonna turn on the auto time frame. Let's get our monthly odds here. Again, a lot of the time, the low for the month, somewhere around these pivots. And just for comparison, for everyone who's using traditional pivots, it points out somewhere down here. So yeah, next week is gonna be interesting. Essentially, these negative yield spreads are insanely negative. I'm not too sure now, looking at the euro chart, if I want to set this sort of expectation, some sort of up and then down and reverse. I think net going into next week is, if the thing dips, it'd be great to buy the dip, because there's still a lot of bullish action towards the final week of April. So this week ahead outlook is more like a 2-week ahead outlook. Because this next week, sure, you can go ahead and hit new highs on the dollar, but essentially what you're calling out for is for just a straight up momentum continuation of the story from last week. And I'm not too sure, given the economic data in this upcoming week, if there's going to be enough. to change the story. So there's still very, very good odds of continuation, and any dips might be minor, and if there is some pullback, man, I would like to buy that dip because the following week really does look quite bullish. Again, this is kind of like a 2-week ahead outlook than it is just a 1-week ahead outlook. And yeah, Ari, when you look at the timing dots with the ranges, I mean, what's nice with the timing dots is it helps you find particular clusters of like, hey, when we've had our high this high up, if you expect this to be the high for the month, there's this cluster of lows right here, and then these more variable cluster of lows right around here to find. So it'd be more like this. So yeah, these timing dots help a lot with interpreting the ranges, where the ranges tell you the probability of finding the low at a particular price, and the timing dots give you an empirical view of where lows have occurred historically for a given month, given the current high, you know, plus or minus some percent, plus or minus some amount of bars. That's what these percent bounds and bar bounds are for. This indicator is not yet done, but it is so close to finish, I might be able to release it over the weekend, to be frank. I thought I was going to be spending a lot more time building this thing out, but all I need to do is add a couple more fancy inputs, and this thing should be ready to send out to everyone who's in the trading group. I'll tell you what, it definitely helps being able to say, hey, a lot of highs when you have the low down here. You get a lot of highs up here in particularly bullish environments. So whether we do something like this and spike up and move down like that, or we have something like this is why I'm kind of being a bit wishy-washy with my expectations for the following week, because ultimately I'm kind of indifferent to what happens over the next week. However this week plays out, I'm going to try and keep my eye on the ball for 2 weeks out from now. The only thing that would change that expectation is if we shoot up to essentially 107 this week. If we go up to 107 this week, then, I mean, this becomes a problem. Like the mid 108s, and I'm really not comfortable setting that as my expectation unless this particular scenario here actually does play out. Because you can tell just by looking at the ranges. I mean, look at this histogram here. You have a good chunk of your probabilities here, but then you go from this more opaque gray to a less opaque gray. The transparency goes down. And as the transparency and the size of these bars go down, note that the probabilities over here also go down. You can see it starts at like 2.5%, then it goes to 1, 1.5, 1, and then below 1 above here. So this is the fat tail. So what would that be roughly around here? Call it 107.7. I would be concerned about getting tail moves past 107.7. So now that we've identified that spot, let's go ahead and draw a line. Let's not only timestamp it, 0413, Let's call this tail risk. 108 plus 108 tail risk. And draw another arrow to like that. And this would be conservative because you got some crazy dots up here. But you got a little cluster here, so let's kind of split the difference. Color that one green because that's a bullish expectation. Now, there is a flaw, you could say, with doing this type of interpretation with this type of data. And that this data is frequentist. It's looking at the empirical data that actually occurred. So these are dots that represent highs for prior months. Each one of these is a unique high for some prior month in history, conditioned based off this low here. So it looks back in history, checks, hey, when have we had similar lows before in a month, sometime in history? And it generates all these dots like, hey, when you get your low here, here's the possible set of outcomes for where your high could be for the month given this low. And as we move forward, we can update our expectations to say, well, these dots here don't make much sense anymore for our expectations, for our interpretation. And nominally, these dots here make sense for us to pay attention to. And these dots here scare, the crap out of us. Sure thing, Ari. By the way, if anyone else wants me to look at a chart, feel free to. Feel free to ask. I'll go ahead and look at Aussie dollar for you, my man. Okay, so super negative yield spreads. I'd say net this week's expectations on a lot of these US dollar pairs was pretty much on par. You can see I set negative expectations up and then down, but I got the close wrong. I believe we got some negative GDP numbers. The ECB came out with their survey forecasts and they were not particularly good. Yeah, these yield spreads are terrible right now across the board on the US side of things. So instead of looking at the highs like we did on the DXY, we're going to look at this high here. So given this high for this month, where have we found similar lows? And to me, it looks like most of our lows are in this cluster right here. And you can see with the range probabilities, most of these lows are actually slightly below that peak, right? We have this here. So there's a real chance that I would say, overshoot. And I use that term specifically. This area right here is the nominal location I would expect Aussie dollar to move in a bearish environment. But that would assume that the lows are somewhere over here towards the end of the month. So we just kind of grind down pretty much like this. Essentially, the volatility stays high the first couple of days into the next week. And then this week over here, you go sideways in the final week of the month of April for Aussie dollar. But I have no reason to set that expectation for 2 weeks from now. And you can actually see most of these lows that are on the extreme side are actually in this final week of April. So the low for the month could end up looking something like that. Not great. Not great. So I like these dots because they can make you aware of, hey, given the current high for this month, there's a risk of overshoot from the nominal expectation. And the nominal expectation is just where the probability density is highest, which is this area here highlighted in green. And you can see these odds are larger than these odds down here. But you can see we have some uniform area here, 2%, 2%, 2%. When you see a bunch of odds that look very similar to each other, like they're within 0.5% of each other, this whole area right here, this is very high variance. Essentially it's pick and guess where your low is going to come in. This is like the falling knife area. That's the best way of describing this. Past here, this is all falling knife. So either for Aussie dollar, expect something like this, or something a little bit more volatile. And I'm not quite sure what economic data or what kind of surprises I should be on the lookout. But by having this information available and saying, hey, I need to be on the lookout for any sort of economic surprises, I can look at the economic data for the week ahead here while the markets are closed over the weekend and do some outlooks research, go to some institutions, look at the economic calendar, and figure out ahead of time, not on the day of, but ahead of time, where those risks could actually be. What economic events have surprise potential in them? Yeah, because these yield spreads look absolutely disgusting. So nominally, we can set our expectation to look like this and set that to red because that's a bearish expectation. And then do the same thing we did on DXY with a trend line right about here. You don't get too much movement lower. See, a lot of these lows are just below that threshold here. So I would still say, hey, somewhere around here or around here towards the lower part, somewhere, I'll go ahead and draw a little box. That'd probably be the best way of describing what I'm looking at. Somewhere in this box, I would expect the low. Now, don't get me wrong, this is essentially a 92 pip range. So I have a wide degree of uncertainty here. But I'd say, yeah, right around there. Oh, yeah, check that out. Right when the peak starts ending and right when the colors start going into a very transparent shade of gray, that's where I'll start to expect the bearish tail risk. Let's go ahead and timestamp that. Let's call that sub 0.63 tail risk. And let's put that below. That looks good. Yeah, you can see you get a few occurrences, and it seems like the timing for getting these movement is actually around here. You can see these dots, right? So the super bearish tail risk either comes around here, which would be next week, or around here. And I have no reason currently to expect these sort of moves here. And I'll have to do some more research into the end of the month as to why to set that expectation. But the key point is, hey, this data is here. Time to do some research and to figure out what's on the move. Let's see here. Anything else you guys want me to look at? We can go and check out crude. So we got our bullish expectation plan out. We traded all the way up here, but looks like crude oil pulled back super significantly. Again, I'd be concerned about more highs up here, given this current low. I think I need to adjust. No. Yeah, something's going on with the data right now here. Let's look at next week's probabilities. Yeah, probably something along these lines here of a slight pullback on oil. Things are still very supply restrained in the oil market. Oh, looks like we timed out. Indicator took too long to load the probabilities. This has changed the time frame. Reload the indicator. And it looks range bound to me. So something along these lines here for oil next week. Keep it nice and simple. Let's go ahead and check out gold. Yeah, we got pretty close here within the margin of error, and I think that's supposed to be a green expectation here. Because this is pointing up. And I think net that expectation was met. And net that closing expectation was met. As far as next week, let's look at the low odds. A lot of lows come in right around here. Yep, and you can see there's the probability weighted pivot right there, pretty much right at the open. Color that red. Set that expectation, so probably slight pullback. Let's see here. Anything else we can use to help us? Let's look at those high odds. Well, probably range bound again. Also on the gold side of things. Go ahead, set that to green for the bullish expectation. And leave it at that. One more thing we can do is bring up the strategy dashboard. Let's bring up these probabilities here and look at our range bound strategy dashboard. So what does the strategy dashboard say for the range bound trades for next week? This is what we want to look at. Let's see here. You hit your stop loss, not a whole lot here on the bullish range, which would look like this. So this particular bias over the last 24 years The stop loss is hit 16.67% of the time. And this number is actually calculated based off the number of times you get a low that's below the stop loss. So you can see 16.67, and then right here for the next period, next week, week 16, stop loss 16.67. So yeah, that looks pretty good. You overshoot quite a lot. So good chances of hitting the exit and good chances of overshooting the target. Real quick, let's update this to high so you can just see. Yep. Looks good. Yeah, you only close in the middle here between the entry and the exit zones about 25% of the time. So this is not necessarily a range bound week. It's either essentially closing sideways here from this entry or closing up here, if not a little bullish above the central pivot. Let's see here, BTC USD. I set a good expectation on this. I think I did this on stream. I set a bearish expectation down here. And if I delete this here, you can actually see real quick. I'm actually going to unbias these and hide the strategy dashboard and hide this. You can actually see we hit our expectation, our bearish expectation for the low, right on cue. And that was actually because of the timing dots. I was looking at this cluster of lows right here. So given this high, I was looking at this cluster of lows. And you can kind of see I split the difference between this left side and this right side. Again, just a discretionary expectation. And then this was the one time we did get our bullish bounce into the close of the week. Bitcoin's still not done for the week, but we'll see if it continues going up higher. XRP USD, let's see. Yeah, similar set of lows, but not as much historical data as with Bitcoin. Oh, wow, you can actually see there's a bit of a bump right there. Yeah, you're right there at the edge of your highs. Yeah. Well, we can also look at next week's ranges here. I'm not too sure how much historical data we're loading, so I'm going to bring up the dashboard. We only have 10 years of historical data, so I'm not too fond of using the probability pivots for trading this. Generally speaking, I want more than 10 historical samples. So not the best in the world, frankly. Yeah. So I can't really set an expectation on this for next week with the information I have available. Well, not only that, I don't really look at XRP that much. Let's see, what else can we look at? HYT. BlackRock high yield. Wow. High yield. Absolutely plummeted. How does this look on the month? Oh, it's probably going lower. Yeah. somewhere around here, I'd argue. Somewhere around here over the next week, it'll probably find a low. We can set that expectation up and kind of just draw in the middle of this area. And we can look at our ranges. Yeah, you can see a lot of lows around this area. We can also look at our probability pivots. We have 20 samples here. And this particular month, you don't get a whole lot of huge moves. So this is definitely a non-seasonal move for the month of April. Usually your lows are pretty tight here above the S1 pivot. So in the last 20 years of data we have available for HYT, we have only come down here, I think, once before. So, yeah, this is something new for HYT, for sure. We can also check the weekly ranges. You can see a lot of lows around here, but good chance of overshoot, if I were to say. Good chance of overshoot. ASX. Oh, Hytera on the ASX. Invalid signal. Oh, what is this? Yeah, I don't know if I can set expectations for this. This is really bad data. Let's check out New Zealand. We've set bearish expectations again. The yield spreads do seem to be improving more significantly on the New Zealand side of things, so I wouldn't be surprised if it started to hold up more significantly over this next week. So maybe a bit more down. Oh, 413. And let's look at our timing dots for the month real quick. Yeah, you actually do get a decent number of lows around here, but this is more concerning to me, these over here. And this seems more likely given the frequency of this data. Again, this is all in the last week of April, or towards the end of next week. So I would be particularly cautious. Yeah, that you can see this is all falling knife stuff. Oh, 413. Yeah, I would be concerned about large spikes lower around next week or towards the end of next week or in 2 weeks from now for the month. And this would take you effectively to the low end of the 58 handle. I mean, these are potentially big moves coming up. Again, pretty... again, 107, high 106s is not to be totally discounted here into the end of the month. This is not a good look for risk on. That's for sure. Let's check out the Canadian. Yeah, you can see I've highlighted these areas over here But in all seriousness, I need to also highlight like these dots and these dots here, kind of two individual spots. Towards the end of the month, a lot more variance. Towards next week, you got some hope of finding a high around here. Maybe growth out of Canada. We get some Canadian growth numbers that actually show improvement and put a reverse on this thing. But at this point, for example, a lot of people would say, oh, you know, if oil continues going higher, the Canadian dollar should improve into the end of the month. The problem is that the correlation with the Canadian dollar and oil has been steadily declining to a significant point. And now the United States does more in the oil business, frankly, than Canada, in my opinion. Maybe not as a percentage of their country. But there's been more argument that the US dollar itself is becoming more of an oil commodity currency. As oil rises, there tends to be more of a positive impact on the dollar in these sorts of regimes. I'm not 100% certain on that, but this area here now seems more like a clear risk in my view going into the rest of this month here. Let's look at some highs. And yeah, this is a new record for the last 21 years of data we have. You've only been up this high relative to pivot points pretty much one time before. So the seasonal data is not much help here. And you can see either the high comes in, I mean, effectively here next week, or I'd be cautious around seeing highs around kind of this cluster. So I'll go ahead and actually set that as my expectation around here. It sucks, but this is quite dollar bullish at the moment. And again, we timestamp these expectations so that then as we get new information, maybe these yield spreads reverse, maybe US growth, we get some US growth metrics that come out poorly, maybe we get some growth metrics out of the rest of the G7 that are particularly phenomenal. That could reverse this. But the whole point is, hey, given the current information that we have, going into the rest of the month, I'd be concerned about higher highs. And this is like close to 150 pips higher. So that is not great for the Canadian dollar's outlook here into the end of the month. Also, if you've watched this far out, I'm going to just tell you something about expectations. When someone on YouTube or someone in like an institutional outlook is saying, we are expecting price to reach X amount, up or down by some date. Every now and again, do you want to see a healthy balance of nominal expectations? And again, nominal is just whatever the most probable thing is. So it's like, hey, we expect the high to be somewhere around here because this is where most of our highs are. We have a lot of highs that have historically occurred here. You want most of your expectations to be nominal, quite frankly, because that's just what's most likely to happen. But you also want, every now and again, to run into expectations that when the economic conditions become like right now, with potentially reaccelerating inflation over the next couple of months here, and Fed rate cuts getting pushed back into September, and potentially maybe only one cut in December. I mean, I did a whole video on this, literally a day or two before CPI came out. Looking at the expectations, looking at leading data, looking at the risks that could be coming up is especially important to setting expectations. So you want a healthy mix of people who are saying, oh, we have some nominal expectations, right? These are all pretty nominal expectations, right? Sometimes they're really on point. Sometimes only a couple of these expectations are met. But over time, okay, things work out. Like here, and I actually had some longs around here. I didn't put the drawings up, but I made cumulatively like 400 pips over the last 4 days. And now I really have to consider, well, is this something I still want to be long? And when I look at all this data, I am looking at two particular theories to set my expectations. The US dollar smile theory and the growth inflation matrix. So if you're able to stick around and watch my streams going forward or hop into the trading group, I can go in depth on those things with you. But to sum it up, I look at my expectations through usually those two theories. And when I look at the upcoming information, I don't see anything that's going to radically change my view through the lens of dollar smile and growth inflation matrix. And then when I look at this data here, I can clearly see the risks. So don't get me wrong, like, yeah, we could top out here in like the next 70 or so pips on this pair, or on euro dollar, bottom out essentially right now, or bottom out in the next, oh my god, another 100 pips. How about VES, the S&P? Horrible, horrible, horrible day today. Look at these timing dots. Essentially, past here, look at all this stuff. I mean, you got a lot of lows around here. So this would be the cluster of dots that I'm looking at. Again, these are just prior times in history. We've had the high up here this month, and conditionally based on getting the high here this month, where have we found the low before? So don't get me wrong, we can stop sometime this month, but when I look at this data, this is not really conductive to a super positive April here, especially into the end of next week and potentially into the last week of April as well. Maybe there's a good buying opportunity sometime this month in April, after there's some serious fall. But we have to actually see that fall. It's one thing, again, to set this expectation, but now we're actually here. And now is the time to update expectations. Do we continue going lower? And what are the risks, right, of going lower? Right? Here, or here, something like this, or something like that. I mean, I would not be opposed to taking shots long in this area here. But I also don't want to miss out on the move down here. So I need to play this smart, which is if there's any sort of pullback, maybe shorting that, or going short into continuations lower, essentially chasing. So this can be very dangerous, especially for new traders, because new traders don't know how to set expectations very well. You need to have good experience to set good expectations. I mean, setting an expectation like that or an expectation like that is quite different, because the timing and the volatility over time is quite different. I'm just pointing out the risks here that I'm seeing, and that there's a bit more nuance to this next week. And again, you know, watch me eat my words if we end up just plummeting here, and on the S&P it plummets, and on all these other assets it just plummets. There's a risk of plummeting more next week, more risk off towards like Wednesday, Thursday, Friday, but also of just effectively going sideways and then plummeting in the following week, the last week of April. So over the next 2 weeks, there's quite a bit of risk. I mean, I'll go ahead and set an alert here at 106 on the euro dollar. Right around here. Because past that, I'm starting to get concerned about hitting these spots here. And given the negative yield spreads on a lot of these assets, I'm just not interested in taking any longs right now. And any sort of pullbacks, I'd be interested in shorting. The data is not on the bulls' side at the moment. However, again, I'm kind of looking at this spot here around 105 as like, hey, if we did something along this line here, if we actually plummeted into next week and found our low somewhere around here, check this out. There's not too many more lows that get made outside of like really crazy moves, right? So maybe there's some kind of slight move lower, but net, my expectation would be to find some kind of pullback into the close, some risk on, if we do get this sharp of a move lower. And then maybe in the next month it moves lower again. And we'll get there when we do month ahead expectations. But when you start setting expectations, you really have to be foresight. You have to have foresight. You have to do everything you can to try and prepare yourself ahead of time for the decisions you have to make. So then you're as best equipped as possible information-wise to make trading decisions. Oh, iron. I think I actually have that here. Let's see. Oh, iron's back above 100. That's great. We're going to use a line chart for this. And that doesn't work right now. Yeah, check that out. I wouldn't be surprised if that was the high, frankly. So iron ore, given this low on the month, you do find a cluster of highs right around here. So this thing could be making a high like right now and then fall off a cliff here. Or for iron ore, this low could also lead us to a high variability of highs, like way up here towards the end of the month. So I'd be cautious of shorts around here. Maybe lower position size, you know? I wouldn't be opposed to taking a shot, but I would acknowledge the risk of spikes into the end of the month here. So, somewhat optimistic view of iron, but also a very clear risk to, right, more downside. Essentially going back to 100. Yeah, man. These timing dots are pretty nice. I can't wait to get them out to you guys. They're helping me a lot in setting expectations. Because as much as the range probabilities, frankly, have helped me out, the problem is that these don't help with timing, right? They tell you, hey, here's the probability of finding a low between each one of these bins. But these timing dots are conditional. They say, hey, given this high, where do you find the low? And at some point in the future, I would like to implement conditional probabilities into range probabilities. So we can get conditional probabilities here on the ranges, and they can more closely match what we see here on the dots. And I think that would be quite nice to see. But the math for range probabilities is a bunch of linear algebra. It's not super straightforward, and especially optimizing it for Pine has taken quite a bit of time. So everyone in the trading group and who's subscribed to these indicators, really appreciate it. And again, if you want to try these things out, there's a 10-day free trial. Comes with the trading group and all these indicators. And yeah, I'm going to try and get these things out this weekend. I don't have too much more work to do on them. Just have to kind of update some of these settings, add some settings so you can, toggle off and on certain dots and certain conditions. And yeah, and maybe update these tooltips to be a little more informative. I don't know what other information I can throw in here. Let's try, for example, see this. This dot says, hey, for one particular month, when we had our high right here on this bar, we actually had a more bullish close somewhere around here. Oh, actually, no, I'm reading this incorrectly. This low here is saying when the low for the month is here. Whenever you got the low for the month here on this particular month, the high was like way up here and the close was way down here. Again, I'll be doing a video and a set of tutorials when the indicator is released. So all you guys who want to learn how to use this thing, you'll have a little course to go through on, hey, here's how to interpret the dots and where they can be useful, and also explicitly when they're not useful. I always make sure when I'm demonstrating these indicators, like, hey, there's certain assumptions behind all these indicators that you need to understand when making discretionary decisions. And I think with that all said, those would be the expectations that I have for the month ahead. I think I should update my dots. Again, I have kind of two expectations here. These areas here and here. I mean, if I'm forced to do my gut feeling of expectations, I'd set them here. I would just get bearish right off the bat. And I'll go with this. And I'm fine, frankly, in my opinion, if this is wrong. In fact, this would be my preferred outcome. So then at some point I can probably take a shot long around here. So I would prefer this outcome, frankly. Yeah, this would look pretty good. Let's look at these lows again one last time. And that's actually where we see a lot of our lows, given the probability pivots. And it's a bit of an overshoot on the ranges as well. So I'd be totally fine with this expectation going into next week. All right, you guys. Slightly of a longer stream, about an hour and 10 minutes. Thank you guys very much for watching. And I'll see you guys, for those who are in the trading group, in the Outlook review event coming up here in about 3 hours. And for everybody else, I'll see you Monday in a bit.